Hello viewers, how are you all doing? I know you are all doing really well. Namaskara and welcome to the inaugural episode of Rupee Rakshak news channel. I am your host Raghu Rao. Every week I am going to take you through precisely those things that are important for you to grow your money and few other things to make the money part more interesting. Today we start with our inaugural episode, which is an Independence Day special from Rupee Rakshak. Rupee Rakshak is a brand of Finmo Investment Advisors Private Limited, a SEBI RIA number INA 2001490. So, whatever views we share on the financial markets for the week is from a registered financial advisor. And it's for your benefit and education, but this is not an investment advice. So if you need investment advice, you're welcome to go through our website rupeerakshak.com, contact us, and if you like our coverage of views and news, subscribe to this channel on YouTube. Now let's welcome financial economist and founder of Finmo and Rupee Rakshak, Mr. Mohan Krishna Rao. He can tell us how watching this channel can be the best use of your time. Welcome, Mohan Krishna Rao.
Thank you, Raghu. Wishing all the fellow Indians a warm greetings on the 77th year of independence of a great nation, Bharata.
Mohan, tell us, why should people watch this news channel? What benefit do they get by watching this news channel?
See, the Rupee Rakshak news channel, when people watch, there is always a question why there has to be one more news channel. There's already plenty of news channels, the business channels like CNBC, ET Now, Z Business. Besides, there are a lot of news that individuals consume today, being all the time on the Twitter. There is instant, every second news coming in. This is also the problem of plenty, because you do not know what is right, what is wrong. For an investor, it is all the more important because an investor has his money either in stock market, in mutual funds, in bonds, in real estate, property, gold, silver. So whatever news is coming in, is it going to affect the investor? So what we are addressing in Rupee Rakshak News is to make things simple from the investor's point of view, that he can get confidence that what is happening in the market is not affecting him. If at all, if it is affecting him, he knows what action to take. Basically, you can sleep peacefully in the night when you watch this Rupee Rakshak News. Once in a week, at least spend half an hour, 45 minutes in a week, you can sleep peacefully. The Rupee Rakshak News aims to offer the investing public a clear view of the market action in each of the asset class. The role of a financial advisor like Finmo is to work in the interest of the investors, and this RR News aims to help the investors with simplified market understanding and take charge of their investments. And Rupee Rakshak News brings out a new episode every Friday. They should be able to sleep peacefully if they watch Rupee Rakshak News.
Oh yes, Mohan. Sleeping peacefully is the key takeaway, and it's very important, definitely. Viewers, we are celebrating our 77th year of independence. In these 76 years from the day of independence, the journey of India is nothing but splendid. Mohan Krishna Rao has authored a book, India's Splendid Journey from 1947 to 2019. So he is not just an economist, he is an author and a historian to some extent as well. So a keen observer of history. So this is a compilation of major events in India since independence and under every prime minister.
This is the first time Jawaharlal Nehru in that picture took the oath as a Prime Minister of India in 1947. In fact, the situation was not great. Today we celebrate, but the situation was highly chaotic. How such a country, in fact in 1947 nobody believed that India will survive even 3 months. It is like a sick baby which is born and rest of the world, the best of the people, the intellectuals and the political economists and the analysts, they said they had already written a death note saying that this country will not survive. The IIT was started IIT Kharagpur was started, which was, in 1950, they could think of the highest advancement in technology and higher education, the requirement for the country. Because most of the leaders of the day were well educated and they knew the importance, they had that vision. So they created amazing, institutions, and which 40 years down the line, you could find an IIT technologist creating a 500 crore company, which would not have happened if IIT did not existed in India. Similarly, in terms of creating institutions like SBI, so there is a series of things, the great institutions that were built, which was a big achievement. And moving to 67 to 97 was more a period of lot of pain, because when you go through structural change with the situations of emergency and the later nationalization of the banks, and then the takeover of the Punjabi militancy and the anti-Sikh riots, in which Indira Gandhi, for that decision, actually she gave her life. So the great things happened during that, but there were a lot of structural difficulties, because you normally go through the problem. So from 67 to 97, it is all about the structural growth that happened, which also led to a big amount of crisis in 1991. All that which was done during the last 20-30 years, the big public sector corporations built and the state controlled organizations in all infrastructures and everything, finally by borrowing external money, led to a situation of huge economic crisis in 1991. Amazing policies to get out of the problem. The three things, it was called LPG, the liberalization, privatization and globalization, started as a mantra in 92 onwards. 97, 2000, we started seeing the fruits. And the next phase that I talk about is, of course, there were disturbances. That's why I call the structural disturbances till 97. So after 97, what we saw is a growth phase. By the time in 90s, the Soviet broke out, and then there were a different situation arose for India's national security. All the prime ministers from 2000 onwards, irrespective of their ideology or the parties, they stood for the national security. And they created all those nuclear Pokhran tests that has happened. I have talked about it in the book. And the great things that they worked around, making India powerful as a defense country which can protect itself against all the neighbors who are, always a threat. Later, we have seen the digital revolution happening. Initially industrial revolution, then it became an IT revolution. From IT revolution, it became digital revolution. And the growth what we have seen is unprecedented from 95 onwards in terms of economy, in terms of the way we live, the life that has changed. The prime ministers from, I have taken it two parts, till 1991 one phase, and after 92 another phase. So all the prime ministers who came up to 91, this was more a socialist model of development. From there it became a free market development. From 92 onwards with the liberalization, how things have changed, what kind of contributions have come in difficult times, how they have managed and taken tough decisions. I have tried to keep it very less. It's about just 60 pages on this small book. So it is hardly about 25 to 30 pages is what is there. It's a very small volume, but it is more of a collection rather than, it is just to ignite the interest so that someone can go and do more research.
Oh, that's a wonderful and crisp compilation of our history from 1947 to now. Mohan, may I ask, what made you write this book?
Basically, see, I've been a financial economist. For me, history is not my subject. But what I felt, you can't understand the country today if you do not know the past. Particularly, my interest was to give this message to the younger generation and especially the students who are in probably the high school, till 10th and 10 plus 2, and college students. I myself didn't know that there is such a wonderful history till I went into this for the last 73 years. Then today nobody has time.
Oh, certainly. The younger generation in particular wants things
And they are
quickly.
busy on their phones, they are busy on multiple activities, not just on phone. And it's not that they are not interested, but you have to give them something that they can read in very short span of time. And this is the book. In fact, a paragraph of what is written has more than 5-6 years of history. This is more to give a glimpse of what has happened in India, and I'm sure if the students, the kids and the younger generation, if they read this book, they are going to feel really proud about our country, and knowing history is very important.
Super. I'm sure it's going to be a very good reading. And if you would like to download and read this book, you will find the link in the comment section. Feel free to download. This is a free download available. From a historical perspective, let us delve a little more into economic perspective of how Indians have traveled in 76 years in various areas like agriculture, manufacturing, defense, education, technology, and how our lives have changed, particularly over the last decade. Let us take a quick view.
The British left us in pitiable economically poor situation. In the last 76 years, we have progressed in every area, a miraculous growth and development.
The first political step was to unite the country, which Sardar Vallabhbhai Patel very ably did.
Then the positive economic steps of setting up public sector enterprises. Now the mantle has been given to private enterprises to drive the growth. The government has ushered in major reforms and provide support to businesses and farming through green revolution, telecom revolution, IT revolution, crop insurance, make in India, building infrastructure, multimodal connectivity, banking reforms, education reforms, skill development, defense modernization, automation and many more initiatives. Now we are aspiring to be a space power, reaching Moon and Mars and achieving a record-setting feat of launching 104 satellites in one go.
On the path of being a Vishwaguru, events such as International Yoga Day, G20 leadership, and so many more are bringing the world around India as its center, while icons of national pride such as Naya Sansad Bhavan, National War Memorial, Statue of Unity serve to bring the nation together. So, the stage has been set for India. A Morgan Stanley report published this week talked about the past decade in numbers and what the growth outlook for the next 3 to 5 years is. Let's take a look. Our forex reserves has almost tripled. The corporate debt in the last decade has reduced despite COVID. FDI, very important to bring capital from outside. 5 times increase in foreign capital proves that India remains a good destination for investing. CPI inflation is down, though still a problem. Inflation is a nemesis of growth, as all of you know. Direct benefit transfers plays a great role in reducing corruption and bringing benefits directly to the needy. More effective and less leakage. Whether you're looking for opportunities to invest some money right now, or you want to make sure your investments are doing well, you need to know equity, bonds and mutual funds. We are covering these in our weekly updates to you. So please keep coming back to this channel every week. We bring you new updates about equity, bonds and mutual funds every week. Now let us look at the equity markets this week. Overall, global equity markets were negative this week. China has fallen maximum at minus 5.1%, followed by London at minus 3.75%, Japan at minus 2.63%, and US minus 1.22%. The least affected is the Indian equity with minus 1.1%. That too when the market is at all-time high. Post the Fitch and Moody's rating downgrade, sentiments on the US equity weighed negative. Fitch in fact warns that it may be forced to downgrade dozens of banks, including JP Morgan Chase. Overall, Long-term view for US and Europe continue to be negative with macro factors not supporting much. Coming to India, let's look at the Indian equity markets and first large caps. Nifty 50 this week, the updates are after the significant upward trend that the Nifty has been experiencing since March 27th of this year, Nifty concludes in the negative zone with 0.91% dip, making a small indecisive candle formation. The past three candles, in fact, have all ended in losses. How is Nifty 50 in the coming week? Nifty 50 couldn't stay below 19,300, and if it breaks this level, there might be a 2 weeks decline. There could in fact be a small drop to around 18,800, which is an important weekly support point for Nifty 50. Let's look at the equity mid-cap segment. This week, Nifty mid-cap closes with a positive gain of 0.5%, sustaining 6 consecutive positive candles, in fact, giving strong sentiment in the mid-cap segment. Next week for mid-cap, continuous weekly market closures above previous week's low, and this signals vigorous buying momentum. Potential to monitor mid-cap sector until closure dips below previous week's low. Let's look at equity small cap segment now. Nifty small cap concludes with a minus 0.36% slide. So this in fact interrupts 6 straight weeks of positive closures with a minor negative candle this week. Notably, both Nifty, mid-cap and small-cap indices reflect matching trends. So how is small-cap next week? Continuous weekly market closures above prior week's low. It actually signals vigorous buying momentum on the small-cap segment too. So there is a potential to monitor small-cap sector until closure dips below previous week's low. So we looked at the Indian market's performance, and let us see how the baskets of stocks from Rupee Rakshak has performed. So these are the Rupee Rakshak recommended basket of stocks. Some of the top recommendations of Rupee Rakshak are best large and mid-cap stocks, which has clocked an impressive 1.8% gain this week, followed by best mid-cap stocks with a gain of 1.64% this week. The third best performer in the Rupee Rakshak basket of stocks is the best large cap stocks with 1.11% performance. After the market cap performers, let us look at the sector-wise performance in the Indian equity sectors. The top 3 sectors in the Indian equity market for this week are Nifty PSU with plus 2.09%, Nifty IT with plus 0.62% uptrend, followed by Nifty Realty with plus 0.12% uptrend. On the downward side, the bottom 3 sectors in the market this week have been Nifty Metal with minus 3.60% and Nifty Commodities with minus 1.81% and Nifty Financial Services with minus 1.72% performance. Now in comparison to the Nifty indices, let us look at the Rupee Rakshak basket recommendations sector-wise. So these are the sector-specific baskets of Rupee Rakshak. So the top 3 sector baskets from Rupee Rakshak are best technology stocks from Rupee Rakshak with an impressive performance of 2.96% in 1 week of market downtrend, and the best metal stocks following in the second place at 2.77% performance. The third best performer in the Rupee Rakshak stock baskets, sector-specific baskets, are best auto stocks with 1.99% performance. The bottom 3 sector baskets in the Rupee Rakshak are: number 1, the best PSU bank stocks has clocked a negative performance of 1.2%, followed by best oil and gas stocks at minus 0.2%, almost flat, and the best consumer goods stocks basket at plus 0.25 performance in the third place. So far, we looked at the Rupee Rakshak recommended baskets in the market cap and the sector segments. And let us look at the Rupee Rakshak baskets theme-wise based on the Nifty thematic indices. So the top 3 performing thematic baskets from Rupee Rakshak are Number 1, the Best India Defense Basket with an impressive performance of 6.29%, followed by Best India Digital Basket at 4.23% and Best MNCs Basket at 2.12%. The baskets that have performed poorly in the thematic baskets, the Best Energy Stock Baskets has performed minus 1.19% this week, and the Best Public Sector Basket has performed flat at almost 0%, minus 0.07% this week, followed by Best Infrastructure Stock Basket at minus 0.05% this week. Now let us look at the derivatives market performance. This week by our derivatives expert Sumant Roy.
Hello everyone, this is Sumant Roy from Finmo Research Desk. Let me take you through the derivative data analysis of Nifty and Bank Nifty index to see what is the projection for the next week. As we know, market has been closing lower since last 4 weeks. Nifty has closed minus 99.75 points today as well, which is negative 0.51%, and Bank Nifty has closed around minus 55 points, which is minus 1.13%. So let us quickly look into the derivative data of Nifty. If we look at Nifty open interest build-up, we see 19,400 as the maximum Y, so which will act as a strong resistance. 19,300 has the maximum Y build-up on the put side, which will act as a strong support. But if we look at the second highest data, that is at 19,000, so the market, expectation is still a bit bearish. So that's why we are seeing that a significant build-up is happening, far down at 19,000. But we see that there are other significant build-ups at 19,200 and 19,100. So possibly, if the market breaks below 19,300, 19,200 and 19,100 can act as an intermediate support as well. And on the upper side, 19,500 has the second highest build-up, which is 50,000, 50 lakhs 81,000 contracts. So on the upper side, if 19,400 is broken, it may touch 19,500 as well. So right now, as of the current Y build-up, 19,300 and 19,400, market may stay range bound within, and if this range is broken on the upside, there is a possibility market may extend until 19,500. On the downside, it may probably take some pause at 19,200, but below that, there are possibility that it may slide down until 19,100 and followed by 19,000 as well, but which is less likely as far as my understanding goes. So let us look at quickly Bank Nifty, 24th August expiry. Bank Nifty, if we look at the maximum Y build-up is at 44,000 on the call side as well as on the put side as well. So possibility is that the Bank Nifty may consolidate around 44,000 range for some time. Of course, during the entire week, it may not stay around 44,000. So there is a possibility that it can break down or on the upside as well. So let us see where the possibility is. If we see the second highest build-up is pretty far down at 43,000 level, which is 8,72,800 contracts. So that shows that Bank Nifty market expectation is quite still quite bearish. Uh, but we see that there are other significant build-ups at 43,500 as well. So this if market breaks between the consolidation towards the downside, there is a possibility that market may take a pause at 43,500, and if it breaks below, there is a possibility that market may slide down until 43,000, which is less likely. On the upper hand side, 44,000 looks very strong on the upper hand side, so it may act as a strong resistance. But if we look at the second highest build-up, which is at 44,500, so if 44,000 range is broken, there is a possibility that market can touch up to 44,500 level as well. So in summary, if 44,000 range consolidation is broken, so there is the possibility that market may range between 43,500 as well as between 44,500 range. So that is the overall outlook for this week. Thank you.
Thank you, Sumant, for the excellent analysis of the derivatives segment. Mohan, a lot of retail investors are venturing into trading these days. We see a lot more participation in the derivatives trading segment, particularly in options, mainly driven by the need to get rich quick, and motivated by the posts on Twitter and so on, where people are posting their fortunes, and then on YouTube people are showcasing the mansions that they have built out of the money that they made from derivatives, etc. On the other hand, the brokerages, because of a SEBI directive, they are also posting cautionary statements and risk disclosures and so on, saying people are losing money in derivatives. So many of our viewers have this question: being a retail investor or a trader even, is it safe for me to trade in derivatives? So what do you say for this?
Raghu, particularly for the retail investors, what I feel is this: you need to know what you are getting into. What is this derivatives? What is futures and options? What is it used for? A lot of people don't know what is it used for. It is not meant for trading. The primary objective why there is future contracts and option contracts, there are three reasons why people come into the derivatives market. The first reason is the arbitrage. There are price difference in the contracts. Let's say this month expiry contract and the price difference between the next month contract is very small. Especially the institutional investors, they take the advantage of the price rise to deploy money in the short term and make some extra profits. That is the first reason, arbitrage. The second reason why people come in is for hedging. Especially the investors like foreign institutional investors who have large exposure to equity and debt markets in India. If the market goes down or it goes against their view, they need some protection. So hedging is a protection. So if market goes down, you can protect the value of your portfolio, for which reason option contracts and future contracts, forward contracts, all these things are used. This is the second reason, hedging.
Okay.
The third reason why people would use come into this is the reason what you told, that is speculation. Speculation, pure speculation, only traders will come in. They are expecting that some moves, big moves in the market. And let me tell you, derivatives is the most dangerous thing for a retail investor. A retail investor should never come into do a speculative trading, because all these are leverage trades. Actually, you are doing a trade of worth of 10 lakh rupees contract, but you are only putting 70 to 80,000 rupees.
Yes.
But you think that the actual profits is on 10 lakhs or actual profits is on, losses is also on the 10 lakhs. So imagine you lose 2% on 10 lakhs, 20,000 is the loss. But what you have given it as a premium is only 70,000. So your loss of 20,000 on 70,000 is almost 30%.
Exactly.
If it becomes, let's say, 6% loss on the actual contract value of 10 lakhs, you will lose 60,000 out of your 70,000. And you have no control in derivatives which side the premium prices will move. And it will move very fast. Before you can even exit the positions, you will see that the price have fallen and you are in negative.
Yeah, well, that has been the stories that we have heard.
And people don't realize this, and this is very, very important question what you asked. Why are we covering this futures and options? This is for us to know what is going to be the equity position. If you see Sumanji's the analysis, he is predicting the market based on the call writing and put writing. In the option chain, you know which side the heavy writers are there, either on call side or put side. If there are more writers on the call side, you know that that is the limit. So for you to predict where the Nifty will go, in next 1 week or 1 month, you need to look at the contracts in that 1 week or 1 month. Then you know the range, what range the market will be moving. So that is the beauty of the derivative contracts. It tells what market is thinking through the numbers, that if there are lot of call writers and at the particular price level, let us say today is at 19,300. So it was explained by Sumanji. So how do you derive what is the price range? In next 1 week where the price will move, it is actually seen in the option contracts and the number of writers who are there in the call side or the put side. And this keeps changing. Everything can change in 5 minutes. What you predict right now, it can change in 5 minutes, and it has a huge impact on the premiums what you have given to the brokerage for buying those contracts. Like I said, 70,000 you have given, you think that it's okay, let me make 30,000 if it moves up, if it goes down, let me lose 30,000. But you end up losing most of it because you have no control where these changes can happen swiftly.
Even the capital could be lost.
Lot of people have lost capital because we keep hearing so many stories, and there are people who have lost everything because once they lose some 5 lakhs, 10 lakhs, to recover that they will put another 10 lakhs. They will think, okay, I will recover in the next session, they will put another 10 lakhs. And this is hard earned money, and they are in distress to recover, and they end up losing everything. And there are many instances where people have committed suicide because they have lost crores of rupees, and families have actually been disturbed because of this. Of course, if you are someone who understand all this options market, you understand the option grease, gamma, theta, and exactly how this price move happens, then ideally, if you really want to learn, then learn it for at least 1 to 2 years and don't put your money. Today there are a lot of techniques to do paper trading. Unless you get a continuous hang of what's happening in terms of price movements, at least for about 6 months, then you can start small with small capital. And today, let me tell you, this is the game of the institutions. The derivatives markets are controlled by people who have large quantities of stocks underlying. If you have huge investments, you have the power to play the price in the market. So as a retail investor, people think, let me lose 10,000, let it come. If it comes 20,000, if it goes 10,000. But why do you want to lose 10,000 is not a small money.
Certainly.
So my earnest request to all the viewers is, if anybody in your house, anybody in your friend circle are doing any option trading, please be close to them, ask them what they are doing, and they might be in trouble. And they may not even tell you, and many a times parents don't know what the kids are doing, husband don't know what wife is doing, wife doesn't know what husband is doing, how much he has already lost. So please do discuss this, make sure you don't trade. Why do you need money? My question is, even if you want 10% in a month, what will you do with it? We will cover that in the other sections.
Yeah. So you are very strongly suggesting retail investors not to venture into trading in derivatives because there is no power of money, neither the power of prediction available to common people in the derivatives segment.
See, it's one, this the lack of knowledge. You cannot predict the markets and you are taking undue risks. You think you are putting 10,000, which actually contract value is 3 lakhs or 4 lakhs. And when the price moves, your 10,000 can just vanish in 2 seconds. So you shouldn't do things what you are not meant to. And derivatives, as I said, is a tool for hedging. If you have 3-4 crores in the stock market, use derivatives to protect that 3 crore ka value. That's what we do in Rupee Rakshak. We do a lot of hedging strategies for specific clients, HNI clients, and we work out whenever the protection is required. So it should be used for what it is meant to.
So what you are suggesting is that hedging is a better way to do derivatives trading, but even then you should go through an investment advisor, somebody who is knowledgeable applying hedging for your money in derivatives.
Absolutely.
Yeah. So let us look at the bond market updates this week. US 10-year GSEC yield, the government securities yield, closed at 4.19%, a rise of 5% this week. On the other hand, India's 10-year G-Sec yield closed at 7.2%, a rise of 0.33% this week. There was a sharp rally in US dollar index, a sudden jump which was seen in the USD INR of 75 basis points, USD INR consequently trading at 83.29. There was a cut in the crude oil demand from Saudi Arabia. We have seen a slight fall in the Brent crude oil for the week of minus 3.64%. Brent crude therefore trading at $84.5. Coming to gold, gold had a negative sentiment with dollar index rising and seen a sharp fall of 1.19% for the week and trading consequently at $19.03 per ounce. Let us look at the bond market update for this week. This week, the major news has been the RBI monetary policy update and outlook. RBI kept the repo rate unchanged at 6.5% and reverse repo at 3.35%. The Monetary Policy Committee maintained gradual withdrawal of accommodation as its monetary policy stance. The MSF stands at 6.75%. Vegetable price shock may reverse quickly. Real GDP growth projection retained at 6.5% for FY24, still keeping India ahead of many countries in the world, and revised India's inflation projection from 5.1% to 5.4% in FY24. So the inflation data released on 14th August on this Monday was seen at 7.44% versus 6.40% year on year. Major contributors to this inflation has been the food prices. Who hasn't heard of the tomato prices skyrocketing? Coming to the Rupee Rakshak bond baskets. Rupee Rakshak Bonds Basket Advisory is a AAA rated sovereign guarantee bonds with high liquidity and half-yearly interest. You can sell anytime, and Rupee Rakshak provides the liquidity, and it is the best replacement for a bank FD. Now let us look at the top 3 bonds, Government of India securities available from Rupee Rakshak. The top bond is the Government of India security at 7.33% yield, followed by the G-Sec at 7.32% and then 7.31%. Now coming to the government security that had the highest yield of 7.33%, let us look at little more details. This is the Government of India security at 8.3% coupon rate, a coupon rate being the fixed quarterly or half-yearly or annually interest rate as per the bond that is given by the bond issuer, in this case the Government of India. And this is a half-yearly interest rate payment of 8.3%, and the bond matures in 2040. And the yield, as I said before, is 7.33%. Now the top state government guaranteed bonds. Previously we saw G-Secs, which were sovereign government bonds, and what we are going to see now are the state government guaranteed bonds, which are issued by the PSUs of the state government, backed by the sovereign guarantee of the state government. The top 3 state government guaranteed bonds are the Meghalaya Energy Corporation Limited, MECL, with a coupon rate of 10.55% and an yield of 9.69%. And the UP Power Corporation bond with a coupon rate of 10.15% is the interest that you get quarterly from the UP Power Corporation and a yield of 9.59%. And the third top rated bond in the category of state government guaranteed bonds is the UP Power Corporation Limited with a coupon rate of 9.75% and an yield of 9.2%. Now let us take a detailed look at the UP Power Corporation bond, which gives a coupon rate of 10.15% quarterly interest and maturing in the year 2025. So this bond gives a coupon rate of 10.15%, as I said, which amounts to an annual pre-tax interest payment to you at 1,01,500 rupees. The face value of this bond is 10 lakhs, and which is the minimum investment required for purchasing this bond. Mohan, for the benefit of the viewers, I have a question for you. Why should people invest in bonds? Bonds, as we know, are fixed income, and so are FDs. They all give fixed interest periodically. So, what is the advantage people get by investing in bonds?
What you said is right, Raghu, because lot of people they love bank FDs because they can see the branch manager, there is a relationship, and they are seeing the bank being there in the same place from 20 years, 30 years. So, there is a level of trust with the banks. But with bonds, you do not know what it is. The general public, the retailers, they do not understand bonds. But should they invest in bonds is the question. Why should they invest? You asked about two aspects. Why people are having money in the FD? One is the safety and the second is the return. If you have two options and both have equal safety, then both have equal returns, then you do not have a choice, you can take anything. And you have a bond, let us say government security that you are investing, and you have a FD. In comparison to bank FD, a government bond issued by Government of India is much safer, probably 10x. A bank can go down, but government cannot default on its interest payments or the capital. Particularly government like ours, country like a solid financial status countries like India. There are countries which will default like Pakistan, may default like Pakistan. But in India, the government security is more safer than the bond. Now, the second question that comes is the return higher or is the return low? So, which one do you want? If you want to weigh safety over the returns, you should actually go for government securities. The question that comes is it safe? It is safe, and it is just the question of knowledge, believing in it. Once you invest in the government securities, because whatever you invest, you go through a system and you transfer the money directly to the Government of India through the ICIL corporation. So, it is safe. You get your bond in the form of a demat, in your account it lies, and the interest payment comes to your bank account on the prescribed date. So, if you have return higher than the bank FD, definitely you should go with government securities. If your bank FD is normally, what happens over the period of time, in my experience, the bank FD will most of the time match with the government security yield. The long term yield in India has been about 5 to 5.5%, and the FDs always go with the government securities yield, because what would banks do? They also park the surplus money with the RBI and with these instruments. You can directly buy government securities if you want highest safety, no questions about that. Other than government securities, if you are buying any other bond, you have to be very careful in analyzing the ratings, the change in ratings every time, and you must go with an advisor who knows the markets well. There are risks in every bond also. So, it is very important that on two parameters you select the bonds over the FDs. One is, if you get higher safety, best is to go for government securities, and beauty is it is highly liquid, and today we are in a digital India, every transactions happens in your own account. So, it is very safe to invest in government securities because of the highest safety. And if you always find, right now if you see, the yields are much higher, and once you buy a government security, you are locking the yield. If you buy today government securities, now if you do not sell it for next 5 years, the rates will not change for you, because you will continue to get the same coupon rate. Especially right now, there is a big advantage if people buy government securities in next 1 to 3 months. The biggest advantage is, today India inflation is under control. The RBI has been rising the rates continuously in the last 1 year, and it has stopped in last 3 months. And probably once the takeoff comes in, the growth comes in, the RBI would not further increase the rate, probably it will stay there or reduce. When the interest rate is reduced, then the demand for bonds will increase, and people who buy government securities now at whatever 7.13, 7.2% kind of an yield, when 6 months down the line, 1 year down the line, the FD rates will become 5%, 5.5%, 6% when the interest rate reduces. It is normal thing that in any developing country, when the GDP is increasing, interest rates is likely to fall. At that point of time, this 7% looks like 20%. When you have an FD which is giving you 5.5%, if people remember just about 1.5 2 years back, the FDs were only at 4.5% in SBI and HDFC Bank. Now it has increased because rate has increased. Now there could be a reverse situation where rate cut starts happening. If you buy government securities now and hold it for next few years, you are definitely going to get the advantage of getting higher returns, even if you sell 3-4 years down the line.
Okay, so what you are saying is, since the interest rates are peaking, if you are contemplating buying bonds, this is the best time to buy bonds because you can lock in a high yield. Thank you, Mohan, for the insight into the bond market and the purchasing of the right bond in the right way. So let us look at the mutual fund updates for the week. Mutual fund industry net AUM has been 46.37 lakh crore, while the average AUM is 46.27 lakh crore for the month of July 2023. The retail AUM stood at 24.17 lakh crore for July 2023 with an average AUM of 23.77 lakh crores. Coming to mutual fund portfolios, the folios reached an all-time high of 15.14 crore in the month of July 2023 compared to 14.91 crore for the month of June 2023. Retail MF folios, on the other hand, is also at an all-time high of 12.0 crore for the month of July 2023 compared to 11.9 crore in June 2023. A total of 17 schemes were launched in the month of July, all in the open-ended category, raising a total of 6,723 crores from the market. The SIP contribution also stood at an all-time high of 15,244 crores in July 2023. The number of SIP accounts stood at highest ever number of 6.8 crore in July compared to 6.65 crore in June 2023. The SIP AUM correspondingly stood at 8.32 lakh crore in July 2023 compared to 7.93 lakh crores for June 2023. Let us look at the Rupee Rakshak mutual fund baskets, the advisory baskets on mutual funds from Rupee Rakshak. Rupee Rakshak has advisory baskets for various categories of investors, including men, women, and newly employed, newly married, and so on. So whatever state of life you may be in, Rupee Rakshak has the right basket for your needs. So some of the baskets for men from Rupee Rakshak mutual funds are startup fund for you, retire in 20 years, or if you want to retire in 10 years, there is a basket for you. If you have a dream of building your dream home, there is a basket for you, and dream vacation or dream car. For every one of your life goals, Rupee Rakshak has the right basket for you. These are the baskets that are comprised of the top mutual funds in its category, and the mutual funds have been handpicked by the Rupee Rakshak research team and stitched into a basket for your needs and to meet your goals. Other example of Rupee Rakshak mutual fund advisory baskets for women are the Self-Reliant Women Basket and the baskets for women to retire in 10 years or 20 years. And similar to the other baskets we just heard, there are baskets for your dream home, dream car, and dream vacation. And if you want to invest for your kids' future, Rupee Rakshak has the baskets for kids' marriage or kids' education, and even a startup fund for kids. So you can set aside money as a lump sum or monthly to help your kids start their own venture when they grow up. Rupee Rakshak has a mutual fund basket for every need as well. Be it an annual expense fund where you set aside money regularly to meet your annual expenses, or emergency money where you are setting aside money to meet your unforeseen expenses. Just like you would leave money in savings bank account, that's what most of us do. Instead, you park your money in emergency money and earn better interest than the savings bank. That is the philosophy of this basket. And similarly, FD beating baskets where you earn better interest than the corresponding bank FDs for the same duration. FD beating baskets for 3 to 5 years or 1 to 3 years. And then if you want to set aside a fund for gifting your grandchildren. If you are a grandpa or a grandma, and if you want to gift your grandchildren periodically, you can save lump sum or periodically and then pull out money when you want to gift. Similarly, parking fund, where you want to park your excess money when you are still thinking and consulting your mutual fund advisor where to invest. You can put your money temporarily in the parking fund and then you can invest in the other mutual fund baskets. So as you see, for life's every need and every goal, Rupee Rakshak has a basket. The property markets update for this week. The top stories from the property market this week are: WeWork raises substantial doubt about its ability to stay in business. HDFC Bank picks up 1 lakh square foot in Blackstone's Mumbai Towers on a 5-year lease. Maharera appoints intelligence agency to get real-time project information. Home loan, other borrowers can switch to fixed rate regime according to RBI. And lastly, Uttar Pradesh to bring co-development policy to revive stuck projects in Noida and Greater Noida. Mohan, in our conversation earlier, you were telling me that it is important for people to know property as an asset class. Why should people know property as an asset?
That's a good question, Raghu, because what happens is, let me give you a clear picture before I answer this question. We know what is net worth. Net worth is something, whatever you are worth, means what is your financial assets. The assets means it could be property, it could be stocks, your bank balance, all that is an asset. Now, let's see the richest people in the world. What are the richest people? Let's say someone like Adani. If he is worth, he is the richest Indian today, we all know, and in a very short period his net worth, let's say if it is 50 billion. The people like Adani or people like Ambani's, such people, the richest people in the world, their net worth is because of whatever the business valuations that they have. What about common people like us? Somebody who has worked for 20 years, 30 years as a vice president, as a CEO, as an executive, as a senior management guy, or a businessman who is doing well in life and a very successful businessman, maybe running 50 crore to 100 crore turnover kind of companies, and he may be worth what, 20 crores, 15 crores, and this what we call commonly rich. Now these people, if you see what is the majority portion of their net worth or their assets, it is mainly properties. We have seen in last 10 years of this advisory business that every customer who comes in, when we list out, we do the detailed financial planning and do net worth advisory. When we have done that, we have always seen when somebody comes in, someone who has done well in his life and good assets, if he is worth 7-8 crores, his total net worth, including all his properties, current market valuation, his investments, his PF, his bank FDs, all if you add it, minus maybe 10-20 lakhs worth of loans. So the net worth of 8 crores, 90% of that, let's say 7.5 crores is only in property. Now you tell me, if you have majority of your investments, your net worth, the lifelong earning is in property, should you not know about property? At least the property market. How can you ignore? And people are interested in stock market, they are interested in mutual funds, but what is the portion of investments out of their wealth? If their wealth is 8 crore, they hardly have 10 lakhs in stock market. They hardly have 40-50 lakhs in mutual funds. But they do so much of study on mutual funds, stock market, where they have very less money. But the majority of the money is in property. They should understand property well.
It is very true of most people.
Absolutely.
So what should people know about property as an asset class?
See, property, there is lot of things in the news in the market, and the real estate, builders, and there is a lot of noise level in the market. That is not useful for common people. What is important for you? First, you understand what you already own. Let's say you are a senior executive in a company and you are a CEO or a vice president or you are a businessman, and you hold about 5-6 properties, maybe the house that you are living, and you also have couple of plots, other 1 or 2 flats or independent house where you are getting some rent. The first thing you should do is list down all your properties and understand what is their worth today. Is it growing at the right rate of growth? Usually the properties growth in the long term, 10, 20 years, 30 years, it won't cross beyond 9 to 10%. Particularly in metros in the last 10, 20 years, maximum growth that we have done in our analysis is only 15% CAGR.
Yes.
And if you see, the markets have grown at the same rate in the last 20 years. If you had invested in mutual funds, what you had invested in property, it would be more or less the same, or the property valuation is lower if you compare all the properties that you have. So what I suggest, the best thing for people to do is, the properties what they have, they should do an audit of all the list, all your properties, see whether the valuation is growing up. Is it becoming attractive? Because that is what you own the maximum. If you have 90% of your assets in properties, then should you not take half an hour or 1 hour in a week and go through whether it is giving you, whether it is growing in value or not? If you are getting a rent, is it substantial? Out of all your expenses and everything, are you really able to make anything substantial? So you should know how much of your assets are in property. Should it continue to be in property, or should you make changes? If you want to still buy property only, buy where it will grow in value, because it cannot lie idle. Because for 30 years I have owned the same plot, I never looked at what is the market valuation. I always feel my property is always growing. When you actually go to sell your property, you will come to know that everything what you are thinking is a daydream. And when reality comes in, you feel that it is only going at that particular rate. And if you calculate the CAGR, it is not substantial. So what's important? Our hard-earned money. For so many years, we have saved money with lot of difficulty and bought these properties because we didn't know anything else to do. Now it is time you understand what you need to do with your properties and take action. And if you need help, we are there. Get in touch with our office and meet our people, meet our experts, and we do this analysis, the property asset analysis, and we have a specific advisory solution that is for net worth advisory. We do this only for people who come in search of it, and today we are telling that you should do, everybody should do this, and it is very, very important. Your hard-earned money only you can protect and only you can grow. No one else will be interested in what your property value or your assets, whether it should grow or not. Only you should take interest.
Thank you, Mohan, for the insights on the most heavily invested but less cared for asset class as properties. Okay, we have had a lot of money talk, so let us have some fun, shall we? So please welcome Shrisha.
Thanks, Raghu. I'll be taking you through the news and the updates from the film as well as the sports entertainment. This week's roundup of movie shows that last weekend multiplexes and cinema halls witnessed a record number of admissions. These were driven by Gadar 2, Talaiva Rajni's Jailer, Oh My God 2, Akshay Kumar's, and Bola Shankar, boosting their combined gross box office collection to over rupees 390 crores during the weekend, the first weekend itself. Do you know that the production budget of Jailer was 200 crores? But in the first week itself, they clocked in something like 400 crores.
ரொம்ப தூரம் போயிட்டேன். ஃபுல்லா முடிச்சிட்டு தான் திரும்பி வர முடியும்.
And Gadar's 2 production, this budget was around 150 crores. They're already close to 200 crores. Oh My God's was about 150 crores. They're already inching to 100 crores.
क्या प्रकार है भाई ये?
कचौड़ी
चलो चलता हूँ
जी
ओ भाई पैसे दो आशीर्वाद नहीं चाहिए पैसे चाहिए
And this is the kind of euphoria that we have not seen since the COVID. And this is a very good trend that it is setting in, especially for the entertainment industry. And we pray and hope that it continues this way. And the Producers Guild are mighty thrilled about this response. Now let's move on to the sports news. Manchester City, the famed one, has won their first UEFA Cup, defeating Sevilla. After drawing during the main playoffs, and they won through the penalty shootouts. And moving to cricket, India is sighing a huge sigh of relief because Bumrah is at the nets. After 11 months, he is back at the nets, and he's our main strike bowler, and he's our pinch hitter. And Ben Stokes, the English player who had Ben Stokes, we all know that he's an all-rounder, a bowler and a batsman. He has come out of retirement. He had announced retirement in 2022. He's back in the English squad, wanting to win the World Cup again for England. And that's good news for them. And the most important news is in tennis that Djokovic is playing the US Masters in Cincinnati. He's playing US Open after a gap of 2 years. The last couple of years he could not because he had not taken the jab for COVID and he was not allowed to play. And this year he can play, but he's advancing great. And that's a good news for all the Djokovic fans. That's a roundup for sports and entertainment. Signing off, Shrisha.
That's it for the week from the Rupee Rakshak newsroom. Thank you for watching the Rupee Rakshak updates on the markets this week. If you liked watching this news, please subscribe to our channel on YouTube and come back next week at the same time. We would be glad to see you here again. Thank you. Thanks again for watching. Signing off, this is Raghu.